Hey everyone, this is Mark from Stocks and Cash. It's March 1st, 2018. Here with your market update. Talk about some holdings and then some potential setups for tomorrow. So let's jump right in and take a look at the SPY. Another big bearish candle today. You can see it had some wicks on it. Volatility was up. We did pretty much come right down and touch the 100 simple moving average, which we did back here on February 5th. The wicks are a little more defined here than they were back then, and the move wasn't quite as severe. And you can see that we are in our kind of warning area here, or a support area, I guess you could say, based on this retracement from here to here. Let's just take a quick look at the VIX volatility index. You can see it was up today and it also had a similar wick, but still a pretty large bullish body on the candle itself. So volume was pretty strong. If we go back to the SPY, I believe volume was strong today as well. Yes, volume was pretty strong today. A lot of trading going on. And if you look at the 5-minute chart, it was kind of all over the place. So the day started here. We kind of went down. We were up. Kind of meandered a little bit, stayed above the open, went higher a little bit, and then we just broke down throughout the rest of the day with a bit of a rally at 3 o'clock that got kind of smacked down, that kind of went back up in the last 5 or 10 minutes. So again, all over the place. So as I mentioned, yesterday at close, I bought some SPY puts. They were getting kind of out of hand here. And I believe I sold them um, somewhere around here, I guess. Let's see. We opened right around, let me go a little closer here. Thursday at 9:30. So we opened here. I probably sold around this big bearish candle around 1. Um, uh, a conditional trade in place so that if we got below this low here that was kind of put in, that I would get stopped out. Maybe it was here. Whatever the case, I was just trying to lock in profit. I figured if we came back to this low, we might bounce. We obviously pushed through it, and I could have made a lot more money on those puts. But again, it is what it is. I was happy to come out, with a win on that particular play. And then I did buy some calls later on in the day, probably around this area here when we started to rally. I thought maybe we were bouncing off the 100, so I'm down slightly on those calls right now. So I guess that means, what am I thinking for tomorrow? Well, I don't know. Truthfully, because of how volatile the market is, I wouldn't be surprised if we came back and retested the 100. As you see what happened here, we opened way down. I don't foresee that happening again. At this hour, um, on the 6th or on the 5th, I guess, after hours, the futures are way down. They're down a little bit last time I looked, but they're not, super down. Um, you know, on the order of 1 or 2%, anything like that. Right now, the futures are pretty flat, basically, compared to where we closed. So, um, you know, if we do tomorrow, if we open wherever we open and we come down and get below this 100 simple moving average and stay below it, I definitely think we could come back down, at least get to the bottom of this support zone here, which is around 260, 267. So again, if we get through here, I'd be looking for a bounce around 260, 267. If that fails, then I think we would come back and test the low here on the 9th. So I don't see, well, I don't see it bouncing and going back bullishly, but that doesn't mean that couldn't happen. Um, there would be some resistance here based on these candles, although it didn't act as support. You still have to kind of take it into account. And now we have the exponential moving averages that we'd have to kind of contend with on, reversing and going back bullishly. But before we start resuming this bullish trend, if we start resuming the bullish trend, I would expect to see some kind of doji like we saw here. Maybe not as severe of a wick, but certainly some kind of doji to show some indecision and then kind of bounce back up again. But truthfully, I think Friday, tomorrow, I think we're going to see some more of the same as today. Volatility is high in the market. Um, I would think perhaps next week it'll quiet down potentially, but I think this next downtrend needs to play out. Whether we find support here and then bounce up, with a double bottom on this bearish move, or if we crack this level and keep on going down, we'll see. But we have to even get there first. So again, I'm looking at getting through the 100, getting through this support zone, and if we can survive those, maybe we bounce. And this is just a new bullish continuation. But there is, of course, still the opportunity to break down through these levels and come back and test the lows here from the ninth around 253, 252. Taking a look at the Qs. Again, as we noted yesterday, the Qs are certainly much healthier looking than the S&P, but we do have a double top here forming, which is certainly a bearish signal. Volume was very strong. We didn't quite come down and touch the 55, but we did have a lower wick on the Qs. Basically, we touched this warning zone area, this fib. I keep calling it a warning area, but in this direction, it's more of a support zone. So we did kind of come down and touch that support zone, bounced off of it, but still closed below the 21 and the 8 exponential moving averages. So certainly there is some room to come down in the Qs. Maybe we come down and touch the 100, which kind of coincides with this support zone. And we still have this trend line, ascending trend line. So there's a lot of support on the Qs. I'm not too panicked. It's certainly possible to roll over, but and I do think there is some more downside here. But I don't think we're gonna break all the way back down here and keep on going down unless something major happens in the markets. That's just my 2 cents. That being said, I am going to be looking at short trades for tomorrow. Again, it'll depend how the market moves, but assuming that it moves down, I think there's some pretty good shorts to be had. So let's take a look at some of the stuff I was holding. I already talked about the SPY. Let's take a look at Disney, which I had also bought yesterday. Disney kind of had a doji-ish candle, more bearish than bullish, but I was able to sell out of Disney here before the rally towards the end of the day. So I was pretty happy with that. I sold 2 of my puts. I have 1 remaining. See if we come back down and test these levels and maybe even touch the 100% retracement here around $100. So we'll see on Disney. But low risk. I only have 1 put. If we get above this level here of 104, I'll get rid of it. Or if we come in touch here, I'll probably get rid of it as well. 139, I'll take profit. Another one. Let's see. LNG I got into today. Short, bought some puts. Once we broke the low of yesterday's candle, because we kind of opened up high. Once we broke that low, I got into a few puts. It was doing pretty well, and then the market kind of rallied a little bit. I'm still up as of now, up about 8%. If we break through this 100 simple moving average on LNG, then the first target will be around 50.86, and then 48.31 second target. So going to keep an eye on that, see if we continue to roll over. But MACD is bearish, stochastics are bearish, only just got into the sold territory, and RSI is bearish as well. We are pretty far from the 8 exponential moving average, so it's possible to kind of meander sideways or have a doji or something, so that this the moving average kind of catches up to stock price. Another one that I shorted today was Honeywell. Still in this one. Actually worked out extremely well. This one was a 5-minute rule entry, so I caught most of the day. I'm up almost 72% on that particular trade. And just to mention Disney, I'm up about, let's see, 35% on Disney. So, and the actual that's what I'm at now. But when I sold, I was even higher than that. So good stuff today in terms of the trades. Honeywell, I'd love to see come down and touch this 143 level. That's another $4 or so, and I would certainly get out of the trade at that point. Because I'm so far in the money, I'm probably not going to let it go too far up. I'm going to move my stop up. It's at 147.21, so maybe around 148. Give it about 70 cents or so to kind of move around. If it if it stops me out, so be it. It's been a good trade. Um, so Facebook, another one that I shorted today. This one was unfortunate. I basically shorted at the bottom. What I was looking for was a 5-minute close below the low of this candle here. I saw it as a pivot point. I wanted to see it close below. I did see it, and so I shorted, thinking that the market was going to continue on down. Market rallied, so be it. I'm not down an awful lot. Let's say I'm down 12%. So I'll give Facebook a little more time here tomorrow. See what happens with the overall markets. But I am positioned, to have a small loss if it does move bullishly, and I have SPY calls, to offset any losses in Facebook. So that's kind of where I'm at right now. The calls are kind of more of a hedge against my bearish position. So now, what are we looking at for tomorrow? Not a whole lot, but let's take a look at Alibaba. So a few nights ago, I mentioned that a head and shoulders pattern could be forming. This is the left shoulder, the head, and then the right shoulder. I think it was somewhere around here. This shooting star, gravestone, whatever you want to call it, candle, I guess morning star, popped up, and it was about even with this one. Then I saw this, strong white candle. I said, okay, well maybe there's not going to be a head and shoulders. So I ended up going long here. We had an indecision day and then a big down day here. Took a pretty nasty loss on Alibaba around the order of 35%. It continued on down, and actually I think I waited until this day to get out, so I'm glad I didn't hold it any longer. But you can see, at any rate, that the head and shoulders pattern is starting to play out. Left shoulder, head, right shoulder. And if we come down and break this low here, we could really dive down on Baba. Particularly this support zone that I drew. If we get below that, there's not a whole lot helping you up until 147. Then it's a gap down here at 133 and 125. So, I'm not screaming, doom and gloom yet. As long as we stay above the 165 or so level, I think Bob is going to be fine. But I do think it's a potential short play. I do think we come back down and touch the 168 level, especially if the market continues to roll over. That's what I'm thinking there. We're through our support levels. We're below the 100 simple moving average, below our other moving averages. Stochastics are bearish. MACD just crossed over. RSI is bearish. I think it's a great potential play and something I'm going to keep my eye on for tomorrow. Trying to diversify a bit. Citigroup, kind of a similar pattern to Honeywell. If we have, this would be a 5-minute trade. First 5-minute candle. If we get a close below it, buy some puts. See if we can get down to $71 here at this retracement level. And if we keep going down, where does that take us? And actually, I should draw it from this move. So 69 or so to all the way down to 63 potentially. So I don't think I would short it too heavy in case we did bounce here at the 70, 71 level where these two guys bounced. But it's definitely worth looking into, especially if you want to just do a quick day trade down to 71 from 73.66. Pretty good risk to reward there. A couple others, 3M, similar style, chart style to what we saw in City. Um, you could kind of argue there's an ugly head and shoulders on 3M, but it's not as clear. If you zoom out, I guess it's a little clearer. This would be the left shoulder, the head, and the right shoulder. Um, but we did close below the support level here, barely. Volume is pretty strong. MACD is not quite bearish yet, but it's heading that way. RSI is bearish. Stokes are bearish. So again, if the market continues to roll over, this looks like a potentially good short down to the 218 level, maybe down to 206.79, and even down to 192.24 if things get really bad in the markets. Lastly, let's look at Tesla. As I mentioned yesterday, Tesla's in a channel. The channel really started back here, although I haven't drawn it that way. This is kind of the beginning of it. Actually, I guess right here, more or less. So let me just draw that. There we go. It looks a little nicer, a little more defined. So it can kind of move around in this channel, but we kind of came down, knocked off the 360 or so level. This is 361 now, but there we go. Came down and touched 294, kind of meandered, went up and touched 360 again, meandered 360, came all the way back down to 294 again, hit 360, and now it's coming back down. Now it did get some support at the 100. It's through this trend line, which I think I can get rid of now because we already broke it. Could consider this a double top short term. 1, 2, 3. Well, I guess you can't really consider it a double top, triple top rather. This is more of a double top, and then we were down, and now this could be another double top. If we bounce here, or if maybe it's just a sell off and we keep on going. Point is, we have our support zone here. It'd be nice to see if we can get through that to around 320, and then you can short down to 294 if you're not already in Tesla. But again, if the markets are bearish, then it looks like Tesla's a pretty good short to get back down to 294, or at least to this support level here of 310. That about does it for tonight. If anyone has any questions or comments, please feel free to leave them in the comment section. I will try this weekend to put my earnings for the month of February up so people can see, what I did there. Had obviously some wins, had some losses as well. But overall, I'm pretty happy with the performance considering how volatile the month was. I didn't lose my shirt, and actually I think I came out on top a little bit, so not too bad. Anyway, hope you have a great trading session tomorrow. Have a good night and enjoy your weekend.